Hello, this is Janet Nation, and welcome to my channel, Janet Nation on Real Estate. And today I have a special guest. I don't do this very often, but it's, time to do another one. I have a special guest, and this special guest is one of my preferred lenders, Michael Martin from Roundpoint Mortgage, which is actually a subsidiary of Freedom Mortgage, in case you didn't know. So the reason why, and if you like the information that you hear today, please like, share, subscribe, and come back next week. And I wanted to sit down and have a conversation with Michael today to talk specifically about FHA financing. It seems to be a product that is misunderstood, and as a result, many home buyers lose out on an opportunity to purchase a home when they were otherwise very well qualified. So I'm hoping today, with having this conversation with Michael, that we can kind of sort out some of those misinformation, and so that if you are a listing agent, or even if you are a selling agent working with a buyer, that you have a better comfort of the product that particular buyer has been qualified for, and if their offer is competitive, not to snub it and take it into consideration, just like you would conventional financing. So Michael, welcome.
Thank you. Thank you for having me.
And so let's well, first of all, do you want to say a little bit about yourself, how long you have been a lender?
Yes. So again, my name is Michael Martin. I work for Roundpoint Mortgage. We are a subsidiary of Freedom Mortgage. I've been in the business for 20 plus years. So I have a lot of experience with all types of loan products. I educate, inform, and advise many consumers and many agents on how to move forward in regards to the loan process. I am very well versed in every product that's available to the consumer. And I'm here to answer any questions that many of you may have misconceptions about in regards to FHA.
Right. Thank you so much. And what is FHA? What does it stand for?
It stands for Federal Housing Administration.
Okay.
FHA,
go ahead. I'm sorry, Michael.
The Federal Housing Administration is a government agency that ensures loans that are being given to consumers to protect the lender from any future defaults, if any at all. So it makes lenders more willing and capable of lending money to a consumer under an FHA product.
Okay. And how does that differ? What's the biggest fundamental difference between FHA and conventional financing? What's the big fundamental difference between the two?
The biggest difference is credit and income. Those are the biggest differences. Where FHA will allow for a consumer to have blemishes in the past, a bankruptcy in the past, a judgment, collection, things that may not report positively on their report, but FHA will overlook that as long as it's been in the past and enough time has gone by, they'll consider allowing that consumer to take on the financing to purchase a home.
Whereas conventional
is very strict on credit, very strict. They look at credit as a factor in which to decide whether or not a consumer should qualify for that product, because the credit has to be stellar. There can't be any blemishes. And honestly, there are very few consumers that have credit with no blemishes.
Exactly.
We've all missed a payment here or there. We've all, had a collection or a judgment, even if it's medical. Sometimes conventional will work against you in that regard, even though it's something that may not have been your fault.
Right. So one loan is more forgiving than the other, basically.
Correct.
Really.
FHA gives you more leverage and more latitude than conventional will.
Right. And then I think another big difference is that with FHA, it will allow you to put less money up front than conventional financing, correct?
And as a first-time home buyer, no, but as a as a home buyer after your first home, then yes.
Mhm.
So with FHA and conventional, they both allow you to put down less than 5% financing as a first-time home buyer. But
Right.
as far as FHA is concerned, FHA is more flexible in regards to income. So if the income is not as strong on a specific house, FHA is more forgiving. We all know what debt to income is.
Mhm. Well, can
So,
you explain for those who are not quite sure what debt to income ratio is?
okay, so debt to income is your debt on credit plus the mortgage, your new mortgage payment versus your income. So there's a percentage of your income that a lender is allowed to use to determine your qualifications for getting a loan. So it's a percentage of your income versus your debt. So on a conventional loan, in typical cases, the max is 45%. Where FHA allows up to 55%. So they give
Right.
a 10% grace to someone that may not be able to go conventional.
Right. So they just basically, they allow the borrower to carry more debt than somebody who is doing conventional.
That is
Right.
absolutely correct. Absolutely.
Okay. So, as a real estate professional, and especially in this type of market that we're in today, one of the challenges that I hear my peers talk about over and over again is that they cannot, or they're having a very difficult time getting their buyers that are getting an FHA type mortgage, getting their offers accepted. And I think really this is really coming from the misconception that is a less qualified buyer. Well, there's two things that bothers agents. That one is a less qualified buyer, and number two, that the bank is going to be during the appraisal time, the bank is going to be very particular about the condition of the home. Can you speak to that? Because what is happening now is that we have many agents and with their buyers that are totally frustrated because they have very qualified buyers to purchase a home and they're not given an opportunity. I mean, me, myself, I just sold on my rental property and I actually picked an FHA buyer for my buyer and everything went by like perfectly well. So can you speak to this fear that agents have and unfortunately educate their homeowners accordingly that this is a less qualified buyer and that the bank is going to be pickier when it comes to the condition of the home?
Yes, Janet, I would be more than happy to explain that myth. So FHA today is not what it was 10 years ago.
Okay.
So 10 years ago, FHA was very particular about the condition of the property. Now, in today's market, and this has been over the last 4 to 5 years, FHA has very, very little differences in regards to the condition of the property versus a conventional loan. So for example, FHA requires that the house, they look at safety issues. That's really mainly what they look at.
Mhm.
So if you have chipping paint on a front door, a garage door, or any door for that matter, they would ask that that be corrected before closing. Doesn't stop the loan, they just ask that it be corrected before closing. The other safety issue that really becomes a concern is safety rails on a staircase. If there are no safety rails on a staircase, that can be a concern for FHA. And to be honest, I've even seen where some conventional products require those things as well.
Mhm.
FHA, is a bit of a stickler for those two things, but those items, in my opinion, are very easy concerns to address.
Right.
Nothing that would cause any great stress on the loan product or the consumers at large.
Mhm.
But those are really the main two things FHA look at, that an FHA appraiser looks at. As
Right.
far as the rest of the house is concerned, the condition, as long as the house is move-in ready and is livable, they're fine with it. And
Right.
also, I can only speak for Roundpoint. Roundpoint Mortgage allows for COs on any property to not be a concern.
Mhm.
So
CO stat meaning, not everybody
meaning
knows.
that meaning
Certificate of occupancy.
yeah. So
Right.
certificate of occupancy is not necessary to obtain on a single family house for us as a lender,
Mhm.
which means that let's say you find a house where the seller converted the garage into a living space, or they dormered the attic, or they added a extension to the back of the house. If they do not have a C of O, we will not require them to get one prior to closing. That is a
Okay.
major big deal.
That's a biggie, actually.
That is a biggie. And if you, and as
I'm
an
going through that
experienced
right now, actually.
as
Right
an,
now.
I know we talked about that before, but as an experienced agent, you and I both know that that comes up more times than not on a house.
Right. Right.
So in our situation, we do not require that to be done prior to closing.
Okay. All right. And another thing that I just thought about that agents have a problem with when it comes to FHA and pass this on to their sellers, because they always say the seller, but it's not the seller, it's you, the agent, because the
Absolutely.
sellers don't do this every day. They only do this once every 10 years, maybe. Right. So it's you, the agent. So I'm talking to you, the agents right now. They, FHA buyers put down in general a lesser down payment. All right. When they sign the contract. And I'm talking about for us here in New York, not other states may do different things, but when we sign a contract, we also put down a deposit, and or even the buyer's down payment in general is less than those of a conventional buyer. But I don't know why it's so important for someone to put, why agents are concerned about a buyer putting down a significant down payment, because for me, at the end of the day, is can they qualify for that purchase price that they're under contract? Nobody wants to lose, no matter how much money you have in the world, nobody wants to lose $10,000 or $15,000, So I don't understand why agents have this fear like, oh, you're only putting down 5%, you're only putting down 3.5%. So what? That's not the most important thing that matters. The most important thing that matters is, can that buyer qualify for the purchase price? Would you agree with that?
I would absolutely agree with that. And the main concern that a listing agent have had is, can they get their seller the price that they asked for the house?
Exactly.
Regardless of how much the buyer is putting down, regardless of how much financing they're receiving, at the end of the day, will the seller get their number? That is the number one concern. And in my opinion, I feel more agents need to be advocates for the buyer to make sure they have money left over after closing to do some things to the house, furnish it, do some, minor repairs to make the house their own. Right. You really don't want a buyer spending all of their money to purchase a home if they don't have to.
Yeah, whether it's FHA or conventional.
Or conventional, correct.
It doesn't matter. I think we're forgetting about the consumer here.
Absolutely.
And not really just, we're not looking at this whole thing logically. So that is, if we could really just kind of like, not be hung up on the down payment and the type of loan, more buyers or different types of buyers would have an opportunity to purchase that home, because as I said in the very beginning, that they are often no less qualified than a conventional buyer. It's just, how you get to heaven is a different way. That's basically all it is. And I'm really hoping that if there are agents listening to this in particular, and even homeowners, because agents will misinform you. If they're misinformed, then you're going to be misinformed. It's just natural, because that's who you're connecting to it at the same time. So I'm just really hoping that we can be a little bit more open to FHA, and especially now today when home prices are going through the roof, and yes, people can buy and maybe can compete, but they're going to have to put down a little bit less than what they were planning on putting down, and maybe that might put them into an FHA status so that they can still afford that price point. But I wanted to ask you, Michael, before we wrap up. So many offers today, or many contracts today, are going above the asking price, and people are giving up mortgage contingency, like regardless of whatever it is, I'm still going to buy the house. What, as a lender, do you have an opinion on that?
Well, I do. I absolutely do. And I have this conversation with many of my buyers that they have to consider, number one, how badly they want the house.
Mm-hmm.
Number two, they have to talk amongst themselves to determine if the price over the value is worth paying.
Mm-hmm.
And what are they getting in return?
Mm-hmm.
And the number one thing that I let consumers know is when you purchase a home, you're not looking at what you're going to get out of it anytime soon. You're looking at 20, 30 years down the line as to what kind of equity you're going to have in a house.
Right.
So in that regard, you cannot lose.
Right.
Now, of course, whatever they decide to pay over the asking or over the appraised value is something they would negotiate with the sellers or discuss with their attorney.
Right.
I would never, be so bold as to tell a client what to do.
Right.
But at the same time, consumers ask this question of me all the time. They ask, what happens in the market? What happens if the appraisal comes in short? In many cases, as a lender, we restructure the loan to make it work for the consumer based on whatever decision they make. But I also let a lot of consumers know that if they decide to forego a particular situation, it's not to say they won't run into that situation again.
Right.
But that's
Right.
the reality of the market that we're in.
Right.
And I think, a lot of consumers are starting to realize that, as they put offers on each individual house, it's a very competitive market, and they have to understand that. And if they want to play in this market, they have to be competitive.
Right. And we will talk about that in our next video, because I'm saying today that the listing price today is often the starting bid,
Agreed.
So it's not typically where it's going to end. We are talking about the market softening, but softening, people, does not mean that the market is going to crash. It just means that homes are not going to be appreciating as high as they have in the past year or two, but that will be another conversation. So Michael, I want to thank you so much today to answer those questions on FHA. Listen, it will help everyone, every one of us, if they understood it better and was open to it better. Money makes the world go around. Everybody will be happy if this is stop denying people an opportunity to purchase simply because you don't understand. And I hope this education, this little video here just provided a little bit of education. And don't worry, they're just as qualified as a conventional buyer. It's just a different way to get there. And the only thing about the house, as Michael said, is just the railing and chipping paint. That's just two minor fixes. And if your house don't have those issues, then why worry about it?
And I would also encourage listing agents, talk to the loan officer. Talk to the loan officer about specifics, about the buyer, about the FHA product. Ask as many questions as you'd like to get some level of comfort. I definitely encourage that. I encourage that tremendously.
Yes, and I think we do all need, more education on what lenders do, so that we can help buyers initially upfront before we start actively working with them and pointing them in the right direction as to which lender is going to be able to help them. I think that's an area that we really do need help on. That's helped me tremendously over the years, and buyers really also appreciate when you can also speak some of that lingo also. So thank you, Michael. I'm going to have you on again, and we'll talk about different topics. And if there's anyone there that has any specific questions for Michael, he could be reached at
718-757-2088. Again, 718-757-2088.
And this is Michael Martin from Roundpoint Mortgage. Thank you so much. Janet Nation here from Keller Williams Greater Nassau, based out of Garden City, New York. Please subscribe, share, and come back next week for more information on residential real estate. Bye for now.